Well, what you have to do is you have to get up every morning and you got to keep sharp.
Today, my guest is my good friend, the founder and CEO of NSM Insurance, which is now known as Ignite Insurance, Jeff McKernan. Jeff, how are you today, buddy?
Al, doing great, man. Thanks for having me on. It's good to see you. You know, can't do any better. Things are going well. So thank you.
I believe that because it's always going well for you. You've built one of the premier companies in this part of the country, if not nationally. And I'd like to say that along your success, I've been along with you pretty much all the way.
Absolutely.
And it started way back when, I guess, right after we did the Tannenbaum Fesco deal with Jim Quinn from Olympus.
It goes back 30 some years ago because you would call me and talk to me about the business, and we were a pure retail operation. You said, "Hey, Jeff, how about taking it to a different level?" And that's when we started talking about it. So it was really great.
And you did. You become not only a retail business, but one of the premier MGA wholesalers. You know, I always, viewed you as the poster child for that. You were ahead of your time, I thought, as far as the niches. The riches are in the niches, as they say. And you really perfected that. I mean, when we really got together and started consulting for you and advising you, which was a great opportunity because I was super impressed always with the business. Okay. Once we got it really under the covers and looked at it, it was one of the best put together businesses, that I've had ever seen in so many facets, Jeff, from a timing perspective of technology, things you were doing back then that people weren't doing. And, just overall, it was super, super impressive. And, what the folks need to know out there is, you've built a business, a legacy that's not only lasted, but you've done some things that nobody's done in this space. Okay. From a standpoint of being able to transact multiple times, I think it's 7 times with 7 different investors, and continue to keep the brand, in gear, even though you just changed the brand recently, which I'm sure you'll speak to, but you have to lead the country in investors or flips. I know some of the investors were the same, but we were fortunate enough to bring you the first one in 2010, I believe that was, with Abry.
Yeah.
And Brent Stone, and from there, Jeff, this business exploded. And and if you remember, your initial idea to get outside direct capital was to try to take risk along with the carriers, right? That was collateral you needed, and you saw the underwriting profit opportunity as a huge, growth opportunity for you, or generational wealth opportunity, actually. But man, what you have done is amazing, and I want these folks to hear all about it and what you're doing now, and then we'll talk towards the end about the marketplace and how you see things, because you've been an acquirer, you've been a very strategic acquirer. Okay, you're not out there, trying to do the most deals. You're trying to do the right deals, and it's really paid off for you. And a lot of people and the things we've done for you have been fantastic. But I'm really excited to have this conversation today. So I'm going to hand it over to you. Why don't you, kind of kick off? People love to hear the history of NSM and right up till today, and the things that you've done and the things you're doing and where you're going.
Great. Hey, well, thanks very much. And thanks for the opportunity. And again, you and I go back over 30 years. So it's nice to have friends along the way. And I guess one of the biggest things I want to tell people is, people always say, well, how'd you get here? Well, let me tell you how I got here. I got here with a lot of good people that worked with me, not for me. And that's been my motto all along. You work with people alongside you, and you treat them the way you want to be treated. And we've helped people create generational wealth for their families and themselves, because we believe, Billy and I believe, in spreading the wealth. But if we take it way back, my background, when I got out of college, I went to work for PMA Insurance Company as a CSR to one of the 2 sales guys. And one of the guys was a gentleman named Mark Armstrong, who's one of the top salespeople and executives for Aon today. And he was a great mentor of mine, and he's a very good friend of mine today. But he showed me the right way to how to do things early on. And when I left PMA, I became a broker with a small insurance broker at the time. I was the sixth person hired at a company called Mandeville Insurance, which is no longer in existence. But what was neat about that, I learned the business. I had really good mentors there. And, I started doing niches there. I started doing wholesalers. I started doing apartment buildings. I started doing municipalities. And what I realized, there's a lot of leverage when you do a lot of the same things over and over and over. You get to have expertise in that. You get to know the companies about it, but also the community, what you're ensuring that niche is, they're going to refer you leads if you do a good job. And so when we started NSM, my partner and one of my best friends to this day, Paul Norman, he and I came together. He was actually a wholesaler for Atlantic Mutual. And one story I want to tell, which is very important, he and I believed about culture and friendship, and we signed our deal together with one piece of paper. One piece of paper, no lawyers, no accountants, no nothing. And when we left 16 and a half years later, because we wanted to do different things, we had two pieces of paper, and we're still best friends to this day. And my whole point is, Paul was a great mentor, and he's still a very good friend today. But, there's people along the way you always want to be friends with, and you always want to help. And we've helped each other along the way. And it's just, I always remember that, because my first business I ever bought, I bought it. I didn't have any money. I didn't have a contract, but AIG at the time, this is back in the early 90s, I went up there, they gave me a contract. We started issuing policies before we did that, but it was a lot of things were done on faith and a handshake deal, because people trusted each other. And we've taken the business along the way the last 35 years, Alice, because, your word's your bond. You try to do what you do. And if you make a mistake, you own up to it. And you try to fix it and go on. And what we always belong. Billy came with me 4 years later, started out as a salesperson, quickly rose, became a great retail salesperson, still one of the best today. But we started running the business together. And along the way, we brought on people that just made us better. And if there's a message in my talk today, it's people. You can have the best technology in the world now, but if you don't have the best people, it doesn't work. And I like to think, but we started giving people stock. And we said every time we had a transaction, we gave them more. And they said, keep rolling. Because I said, guys, we got to eat our own cake. So that's what we did. So we started as a retail brokerage operation. We morphed into a wholesaler for a bit. But then between 99 and 2001, we started becoming an MGA. And people say, what are you going to do that for? I said, because I like the niches. I think we can accumulate and acquire good premium, profitable premium in different niches. And people thought, that's not going to work. Well, it did work. But we had a lot of bumps in the road. We had some niches that didn't work. The oldest niches that we had was workers' comp. That niche is still going. One of the niches we had was in the transportation ambulance business, and it was good for about 8 years. Then it wasn't, and we changed. But the point is, we were always looking at niches. And Al, you've heard me say this: go 3 miles wide, 10 miles deep. Don't get those things. And what we did is we built a business with a portfolio of niches. And that was the real thing. And we had expertise in those niches. So, for example, I have a good friend, Mike Egan. Mike Egan, he was working for, I knew a fireman's son, Reliance, and he was working for Swiss Re. AIG had called me one day and said, hey, we have this condo business, Coastal. It's only $4 million. The old guy wants to retire. The guy who's running it. I said, who am I going to get to run that? I called Mike up at Swiss Re. I said, take the day off. We're going to go up and see this guy in Tinton Falls, New Jersey. And he goes, Mike, I want you to run this. But he saw my vision. I said, we could take this and make it to something. You fast forward today, it's a $20 million EBITDA business. He was one of the largest coastal condominium insurers for structures all up and down the East Coast. And that's a tribute to what Mike and us built together. We had the carrying relationships, he had the underwriting expertise, and we built this business out. It was really neat. It was really fun. We took the social service businesses, like I said, one of the businesses I first bought, I didn't have any money. Bob Nassett was having trouble with the carriers. I went and helped him with the carriers. I went to AIG. We started doing the business. And we morphed that in from 18 million to height. It was almost $90 million. But it was really fun building. And what we did is we went to the agents and we said to the agents, how can we be helpful to you? My thing is, you better go out and see your customers. And our customers were the agents. And we said, when we started a agents advisory group for every portfolio we had, and we brought agents in, and we had a boot camp on, okay, what are we doing right? What are we doing wrong? How can we make the policy better? How's our claim service? How's our services? And they were tough on us, but it made us better. We have agents today that we've had for over 25 years. We have some agents out that never moved an account from us.
Well, I think a couple points I just want to make, and not to interrupt you, but a couple really key points that I think the people should know is, and most people that know the industry know that when you're a retailer, it was taboo for many years to be a wholesaler and a retailer.
Right.
You perfected that. You were able to do that ahead of everybody.
Yeah.
You know, everybody was afraid because they thought it was a conflict of interest. But you went after those agents. You had a product, and you developed a product. And the other thing you did by developing products, Jeff, which I think you're probably as good as anyone in the country at, is you developed unbelievable relationships with the carriers. Okay, second to none. London, you know, things that you were doing, niche, you know, programs, product, exclusives, all that stuff. The Pen 4, you know, you were the guy that really, you know, if you needed a carrier, you know, you knew Jeff. Jeff could get the carrier stuff done, and that's that was basically a product of the fact that you were able to create all these different programs, and how you did it was amazing. A guy had a niche. Yeah. The AIG said something to you, or you had a friend that was doing something, you backed it, you supported it if you thought it was a good idea, and you got the carriers behind you. So not only did you build this great network of carriers and relationships, but you perfected being able to do all this wholesale business while you were still a retailer.
Business program MGA, because we really were not a wholesale. We're a program.
Well, you know what I mean. You were doing it. You were doing MGA, MGA program, but you were doing it through the agents, which was the conflict of agent because you were an agent yourself.
Yeah, exactly. And that's, you know, Billy always says, you know, we kept touch with the agents, and they can relate to us, Al, because we are a retail agent, and we understood the pain and the process they had to go through. And the fact that we had underwriting authority, and we you know, our carriers, who, you know, Arch were the second oldest and one of the biggest MGAs for Arch, and they've been very good to us through thick and thin. And that's been real, you know, it's been wonderful to do business with people like that. But the people, like you said, you develop relationships, because if they trust you, they're going to give you the opportunity to do more. And that's really what it comes down to. And same with the agents. The agents said, hey, NSM, we gave them product. You know, we provided them, we give them our business. Yeah, if we had to raise the rates, we had to non-renew things. We did it in a professional way now. And that's why agents kept coming back to us. And it was, you know, and we kept the agents close. And I think what I worry about today is everybody's just pushing a button, sending a submission. You got to go out and see those agents. They care. They want to hear what you have to say.
Yeah.
So, Al, I was traveling 120 to 150 days a year to see agents, to see insurance carriers, to see nobody was doing that. And one of the things that I was made our guys accountable for, guys who are running our programs, go see the agents and go make relationships with the carriers. So our travel expense was always high because we were going to see the carriers and we're going to see the agents. And you know what, Al? Retention is good, profitability is good. And that's what happens. We're not, you know, Billy and I have the thing, are you a catcher or are you a pitcher?
Right.
We're pitchers, Al. We're not catchers. Who runs that game? The pitcher runs that game, right?
Oh, yeah.
Yeah.
Well,
so,
I think the big thing when I was engaged with you and we were advising you on the first transaction you did, that I saw that was super impressive, not only how you built the niches, but the marketing that you put in place. You were doing things in marketing that people are just starting to do back then. And then we're going back, Jeff, we're going back 16, 17 years, okay? All right, at this point. So that was impressive because we didn't see that in a lot of places. And looking at a lot of businesses, you know, now I've looked at so many more businesses than back then, you know, in the last 16, 17 years, But that was something that jumped out at me. Okay, and have you continued to perfect the
Yes.
marketing, the inbound calling, which is
Al,
we're
so
doing now too, and it's worked great. I give my partners all the credit, Mike and Ray, and we have an excellent marketing person and whatnot. But are you still?
we were spending, yes, our belief, Al, was, again, you have to build a brand around that specific niche. So you have to do really three things: create the brand, make sure you have the right product, go out and see the agents, but also spend money on digital marketing at the time, which was get out there, let those agents see what you have on a consistent basis. So we did that. We spent a lot of money when people didn't want to spend money, and we always doubled down. Even, in 2007, 2010, people was like, well, we doubled down. Well, we tripled the business during that time because we went out there and saw the people. We said to do the right things. And I can't stress enough, as a program manager, as an MGA, we would develop these agency advisory councils for the agents, and we would fly them in for 3 days every year, and they would tell us about the business, what we were doing. Then we would also sit down with the carriers with them. And Al, that made the biggest difference because they felt included with us developing a product for their business. And that was, Al, nobody has done it today, and we're the only ones still doing it.
You're combining the digital marketing, which was ingenious back then. That's what was really so impressive. That was so impressive that you were doing that, but you never lost the face-to-face relationship. You combined it all.
We had our collector car business. We just sold that to Tokyo Marine Philadelphia Insurance Company. One of the things we did when we took 4 collector car businesses, we bought them over different sites, put them up, started a really neat call center, did the advertising. We're spending more money than anybody was spending. But what we did also is we went to other insurance companies and said, use our product. And we went and visited those insurance companies. USAA is one of our biggest customers. Nobody was doing that. People would say, come out. We would go down and see them constantly. And then when we did our pet insurance, we saw the niche, we saw the opportunity. We bought a small business. But when we sold that business, we were spending $35 million in digital advertising and marketing now. $35 million. And the point is, but the EBITDA was more than that because we realized what you need to do. And people are like, why are they doing that? But you have to invest. You have to understand the market. It wasn't all roses. We had our share of mistakes. But what you have to do is you have to get up every morning and you got to keep trying. And that's the important thing.
No
and
doubt.
If that didn't work, we didn't work. And we have programs that failed. But you know what? Okay, you live and learn from it and you go on to the next one. That's what's really important. But it's keeping in touch with who's your customer. Keep in touch. Go see them. Sit down. Have a meal with them. Play golf with them. The girls, some of our account executives who were women, they would have a nail date with some of the other women. We kind of catered to what we needed to do because we wanted to build a relationship. I can't tell you how many weddings I've been to, and baptisms, mitzvahs of clients because we care. I just got a letter. An email the other day. One of our great agents, Norm Labani, call him out. He probably, but he had cancer 6 years ago. He's been, or more than that, he's been cancer free for 5 years. That made my day when he called me and told me that.
Yeah.
And this is a guy I've known for 20 some years. 20,
Of
20
course.
plus years. But they're the kind of things. You don't do that by sending out an email and hoping you get a submission. You do that by going down and seeing it. You know what I mean, Al? That's
100%. No, you've done a great job with that, Jeff.
And
Great
people
job.
always ask, as you said earlier in the conversation, every time we've bought and sold the business, we've traded private equity under 7 times. Why do we do that? Because it created generational wealth for people. And every time we did it, we added, our people to that stock ship. So, we've made over 75 people millionaires, and some are multi-millionaires, And the point is, I said to them, I'm rolling my stock. If I'm rolling my stock, you should roll yours, the stock I give you, because it'll compound. But, I always say actions speak louder than words. They see what I do. They see what Billy does. They see what Bill County, our COO, is. Mark Kasluch, who's been our COO for the last 8 years. They see what's going on, and they believe in what we do. That's what's really important. And so they're going to follow you if they see that you doing the right thing. That's what's important. And you know, Al, you and I got together with Brent. So Brent Stone at Avery now is at Ethos, but we've had an ongoing Harvard business study about us because most private equities don't buy the same company twice. And that's what's funny. So they bought us, Avery bought us twice, and then Brent's with us. We'll probably do some business with him again. But the point is, people trust you. If you do the right thing by them, they do the right thing by you. I've been privileged to have great partners. We've had Avery, we've had White Mountain, and Manny Roundtree, who was the CEO, Morgan Davis, who was the chairman. They were very good mentors of mine. They really helped me structure, helped me think differently, and I give them kudos for that because they were very good, and they allow us to do our thing. But they always helped us see a different side of maybe things we didn't see, help with our blind side. And now we're with Carlisle. John Richard and Jim Berg have been nothing but great. They've allowed us to grow this business. And then when we sold our commercial part this year over to New Mountains, Bob Mulcair, Bob's a great guy, and they're doing well over there. But he watched our business for years, and he said, "I want that." So it's reputation, right? It's how you do things, what's going on, and and our next chapter is that we're gonna. We've kept a lot of our consumer businesses, our travel medical business, our embedded insurance products we bought in England. We've done so much business over in England, and our colleagues over there have done a tremendous job for us that we're bringing some of their products here to the United States. Who would have thought, right? It's just the reverse, but they've done an excellent job. Chris Rowland has done a great job with our travel medical. Nick Leader, who runs our Aquas, who are embedded business. These guys are alphas. And Jackie Bose, who's been our steward of our Kingfisher business for the last 7 years, we gave her stuff that she had to turn around and fix, and she's been terrific. Absolutely terrific. And my hat's off to her. But it's about working together with people. That's what I always say.
It's all about people, Jeff. Everything we do is about people. If you lose sight of that, you're missing it. So when we did the first transaction with Avery, I think you had about 13 MGA programs, if I had to remember, right around that number.
Small, yeah.
So, yeah. Right, but obviously you built on that, and most recently, like you said, you sold off several of them, but you kept some.
Commercial side.
Well, the commercial side. So what does Ignite look like today? Okay, what does it look like today from a breakdown of retail, MGA program size? It's amazing the size you've gotten this to. Your earnings, the whole 9 yards. Whatever you'd like to share there, I'm sure the people would like to know, because I believe when we first started this, you were teetering around. I think when we did the first transaction, you were probably 8-ish, 9 of EBITDA. We're back with Avery back then.
6, just hitting 7.
Okay, 7. Okay, I knew it was in that ballpark. And 25 million-ish of revenue, give or take. But this thing has exploded. But why don't you tell us what the business looks like today, Jeff, and what the real goals are and your real targets going forward to grow?
Thanks, Al. Yeah. So today, what is Ignite? Ignite Insurance today is currently we've made up of really 4 different businesses. What we do is travel medical insurance. And travel medical insurance is for people who travel, outside their country, whether it's Europe, whether it's England, whether it's Ireland, whether it's the United States. We provide medical insurance if something happens to them. That business is comprised of 2 segments today. The business we have over in the UK with British citizens traveling out of the UK, Irish citizens traveling. And we also have a business here in the United States, 2 businesses called Novisage and ISO, and they provide medical insurance for foreign students coming into the United States, because the federal government requires that foreign students are coming in. So those businesses collectively account for over $40-some million of EBITDA, probably closer to 45. So it's really, really good business. And those businesses are growing in a tough market. With all the political stuff going on today, you would think people still want to travel. They're picking their destinations. So it's a very good business. We're going to continue to grow this business. We have certain assets in the pipeline right now that we're looking to acquire. As you know, that takes time, but we have some things that we want to continue. And travel also, covers trip cancellation, evacuation. There's companies that just specialize in getting people out. There's business like that. There's some TPA, third party specialists in this business we're looking at. So we look at all facets of the travel medical insurance in every way. So that's important. We haven't touched on the Middle East or Asia. That's places where we're going. Insure Evo All Clear, which Chris Rowland runs. He oversees the whole travel business. We have business down in Australia, and we want to keep growing that business too. We're actively looking for an acquisition there. Then the other side of the other business we have that's pretty substantial is called Aquis, and that's embedded insurance. That our customers are big leasing companies and banks, Al, where we go in and we provide basically property insurance for all their assets they're leasing out to their customers. So it could be computer equipment, it can be forklifts, it can be stuff in industrial warehouses, and in parts of Europe we insure farm equipment, believe it or not. So it's kind of so that business is doing well, and we'll do over $10 million of EBITDA in that business as well. And then we have it's really well. And then we have our Kingfisher business, which Jackie Bose runs, and we have a full underwriting service over there called FUL, and that's a combination of our collector car business, of property insurance, where we do some other general liability insurance. That's a whole collection of small SME business, but that'll do over $15-16 million of EBITDA this year, US EBITDA. So collectively, all of them, we're about $80 million worth of EBITDA and about $400 million premium. And where we're going is, I like to say, after the sale, it will be year April 15th, we're reloading in businesses that we want to look at. So, give you an example. We're looking at homeowners insurance, MGAs that have to do homeowners. We're looking at Medicare Advantage products, things like that. Because here's a statistic for you. There's 10,000 people turning 65 over the next 10 years every day. Think about that number. Staggering. That's, so people need, healthcare is a big portion. So I never knew what healthcare was until I started to get into it. I didn't know what pet insurance was until I got into it.
Right.
So we're always looking for something different. And that's what's really important. I'm agnostic to the niche, Al, as long as we can go into it. Like high valued homeowners on a retail basis. That's a big business. Catering to the wealthy, that's a big business. So how do you get into more people, the security business, alarms company system that starts that industry is doing very well. And I look at that and say, okay, how can we get into that business? Who can we buy to make something better of ourselves? The ocean, marine, and cargo business is big business today. When you think about it, something has to get from one place to the next. So it has to be insured. And, most people aren't going to the store. So, whether it's Amazon, whether it's going overseas. So we're looking at opportunities like that. So we look at, all these different types of things. But what we look at is we look at the market as a whole first. And then can we create an insurance product that'll make a difference? And then how do we distribute it is the portion of that. Do we do it directly? Do we do it through agents and brokers? Do we do it through other insurance companies? Do we do it like part of our travel medical insurance for students? We deliver that through universities. So, our university is our thing. And we also do it direct. So it's all different ways. We look for the best way to distribute our product. And as you said before, it can be many different ways to distribute the product. But we want to get that brand out there. So,
well, you got to be a different.
I
think you're very smart in that you're a differentiator and you distinguish yourself differently, Jeff. That's been the key to the secret to your success, really, when you break it down.
Yeah, I mean, it's just look at we're my saying on that: you grow, you change, or you die, both professionally and personally. But I mean that, and it's it's funny. all morning, this morning, we're looking at some real estate, interesting things in real estate. And, you know, what used to take us days to do, weeks to do, you put it in chat and AI, and it spits it out in 10 minutes. And my point is, if you asked me a year ago how good I was at that, well, now I have 3-page subscriptions. We're on it all the time. We're constantly learning, but it makes us more efficient. And that is very important because, you know, you have to be quicker and nimble and you have to see the opportunity and go after it. So you have to have the tools to do it. So we empower our people to have those tools and to use them.
It's a good segue into the marketplace, Jeff, because you are and you feel that, you know, the efficiencies that AI potentially could bring, you're seeing it already for you guys. And, you know, obviously it's putting a little bit of a shakeup into the marketplace right now as we see the public brokers trading at, you know, 12 times right now because everybody's concerned about what this AI is going to really do. And look, you and I have been through cycles in technology with, you know, InsurTech and everything else that, you know, the brokers were going to go away. But, you know, it's kind of interesting to see where AI is going to fall. I'd love your take on it because you'll never give up the relationship, right? You just said it's all about the relationship and the network. How do you see AI playing into it, and how do you think it's going to affect the marketplace?
So two things. One is take the marketplace as it is today, right? Number one, why is it a soft market? It's a soft market today. And people, you got to take it relative. It's been a hard market for 10 years out. Prices have gone up. So there hasn't been a storm. So the reinsurers have come in and they've given stupid rates to the primary insurers. So it's causing rates to fall. And you know, people have short men. So that's one thing. So you have that. Then you have the AI, quote unquote, coming in. What does AI do? You got to remember what it is. It's a tool. It's a tool. It's a resource, and you have to use it. Is it going to eliminate jobs? I would think it eliminates. If you're a coder, if your daily job is inputting submissions, I go look for another job. You know, but is it going to take away that producer who's sitting down with Al and going over his portfolio and saying this? Is it going to take away the guy who has who has 20 apartment buildings and he has 400 units? He's going to want to know what's going on. He might use that to analyze his own business, and we might analyze it so we can show him where the risks are and what happens. But is he going to take away that? Is he going to buy that? Is he going to buy that $200,000 premium, $100,000 premium online? I don't think so. Here's what's being bought online. Your homeowner's insurance is being bought online. You know, on our pet insurance, that was 95% online. But guess what? They wanted to talk to somebody. Our collector car business, we can do online, but they want to talk to somebody about that 67 Chevy or that 82 Porsche, or the 87 Maserati. That's, they're all special. So the human connection is still important. Will AI make us more efficient and make it quicker to get results? Absolutely. It's no different than Lloyd's of London back in the 70s or 80s and 90s when they didn't know they had a claim for 10 days. Now they know they have a claim immediately. Technology evolved. Don't be afraid of it. Embrace it and figure out how you're going to use it. But is it going to take away this? No. It might take the lower SME business online, but if they have a connection, they're still going to want to know what happens. What are they going to do? It makes it more efficient. In our pet business, we had about an 85% persistency on small claims. We did it through AI and chat. Why? Because it was more efficient. People were very happy with that because they got the claim check very quickly. So you have to look at the positive. People look at the negative and say, oh, so take this. Will people get displaced? Yes. But you know what, Al? Here's one. You and I both live on the Northeast corner. Guess what? There's no more toll takers, right? Right. Why? Because now it's a much faster and easier way to go up and down the tolls. Sure, some people got displaced, but they got something else to do. That's the whole point.
Well,
so
I think Jeff, you extremely well said. I agree with your assessment. I think it's a tool. I think you got to see how it works in your business and how you could utilize it. But I don't believe it's going to take over this industry because I've heard it multiple times in over other types of technology that was coming in you look at all different facets of all different types of risks and whatnot. At one time it was going to, the under 50 lives in health insurance was going to go away. They didn't need brokers anymore. People stayed away from it during the Obama years. And, as soon as Trump came in, they started buying it again. I mean, I just think it comes down to what you said very well, and I preach, is people, right? To me, business is really managing people and process. Okay, that's what business is. Numbers are numbers, Jeff. You're not going to change numbers. You can get creative with numbers. You can structure deals to where people put their money where their mouth is. If they want something a little bit more than their business is really worth, there's many ways to skin the cat, especially in this industry where there's so many limited publics left. And I know the big push is all these people are going to go publics, but it's a good segue into my next question for you, because obviously we saw some things happen last year that I don't think we expected to see, with some very big, large brokers, people that you compete with, maybe not on a day-to-day basis, but people that built, almost billion-dollar EBITDA firms, or high quality, niche focused, similar to you. They did wholesale, they did retail, they did it all. And they got to a size where, they came out and thought, hey, we want to stay private. Okay. But at that size, it's harder to stay private without multiple investors and whatnot. And if you're not prepared to go public, meaning it takes years to prepare, you got to leverage down big time on the debt, right? And you need to be prepared from a compliance standpoint, all these things. You're never going to go public. So a couple of the brokers that, I don't think expected to become public didn't do it themselves, but they sold to publics because that was their only way to get liquidity for their shareholders. What were your thoughts around that, and how do you think that's going to affect the M&A world these days? You're an acquirer, Jeff. You've always had capital
Absolutely.
since we did that Abry deal. How do you
Yeah, we
feel
got.
the landscape looks now through what's happened?
And it's a very good point. So the big got really big, and what happened was, I mean, now if we had kept all of our business together, we would have been close to 300 million of EBITDA. Guess what? There's very few people that can write that check. So when we first sold our pet business to JB, we realized the parts are greater than the whole, and that was very important. So that's why we broke it up and said, hey, we're going to sell the pet, we're going to sell the car, we're going to sell the commercial, and we're going to keep this part. So going forward, to your point is, on the publics and the private, it's going to be very hard for big, big PE-backed firms to sell if they're over, I would say, 200 million, to get their value, unless they sell to a public or they break up parts, because there's very few people today who feel like they can write that check and make that return.
100%.
Because it's all about the return.
100%.
So,
100%.
So what I think you'll say is, you and I both know a couple of these retailers that are pretty substantial, 200 plus. I think they're either going to get sold either to a strategic that's already doing something like that, or they're going to get sold to a public, and the multiple could be lower. And the reason the multiple, because what's going to happen there, if right now, is the integration in some of these things hasn't happened. A lot of these guys bought all this stuff up and they never integrated it, and they say they are. But as you just said, when you look under the covers, you're like, not so much. But it does. And you know what? Now they got to kind of deal with that pain, and they got to figure it out. But they've grown so much, they'll still be able to arbitrage, but they might not have the outcome they really want to have. And so I really believe, our philosophy going forward, Al, is we're going to build certain niches up to 15, 20, 50. But if somebody comes along and says, hey, Jeff, I want to buy that travel medical business, or I want to buy that embedded insurance, by itself, we're going to do it. We're going to do it that way because it gives us flexibility.
It keeps you in the game to have more sponsors and investors at a certain size of the business that you can continue to do that and stay private. And I think that's very smart. That it's interesting how you just explained that, because I never thought about it that way until you just did. But that's ingenious because, you're right. I mean, and I'm going to be involved, and I am involved with some of these that are 250, 300 million of EBITDA, and the choices are very limited, quite frankly. And even if they tried to go public themselves, I don't know if they could. And maybe some of them should get together, combine for a few years, and try to ratchet it down to go public. I think that's some of the things you might see. Hopefully we'll be involved in some of that stuff. But look, I think it's really smart what you just said. I never thought about it that way till you said, yeah, Al, this is why I did this and this is why I did that, because I'm still at a size that I can attract, okay, a sponsor one by one rather than having to try to piece it all together. And a lot of the guys that were public and went back private are now going to have to think about going public again at their size, So, yeah, Jeff, I mean, you have done a lot of different things that nobody else has done. I mean, and I say that in a very positive manner and respectful manner because, look, you and I are cut from the same cloth. We're type A guys and we run hard and we work hard and whatnot. And, some people don't understand type A guys as much as they do others because, but you're a true leader and you've built a hell of a business. And I got to tell you, it's amazing that, you're still going at this rate and you're going to keep going. And your brother Billy, also great guy. Hopefully we'll all be down in Avalon playing golf.
I wouldn't be here.
Okay.
Yeah. I wouldn't be here without him now. Yep.
No, Billy's the top. Both of you guys are top insurance guys too. That's the thing people need to understand. You understand insurance. You're not just a guy. You're not a serial acquirer. You didn't read a book and said maybe I should go into niches. This all came natural for you, and you let it evolve. But I'm telling you, it's been very impressive, Jeff, what you've done and still doing, for that matter.
Thank you, Al. Thank you. That's been. We started in the opening list, but I'm very, very lucky and blessed to have the people that have surrounded me and worked with me. I am. Without those people, I wouldn't be here. So, and I mean that sincerely.
Well, that's what my father always said. They made him retire at 79. He was sharp as a tack. He said in his retirement speech, he said, "You're only as good as the people around you."
That's what it's about. That's what it's about.
Like I said, I've been super impressed with everything you've done, and the friendship we've built. And I can't thank you enough for joining me today. I've pretty much covered everything I want to cover today, unless there's something you have. I think this has been outstanding, and this is, when exactly what I expected it to be. And I'm very, very pleased we did this.
Al, no, this has been tremendous. This has been a lot of fun, and I thank you for inviting me to share the time with you. So that's been good. And Al, you're a very good friend. We've been through the wars together. We've been through the good times together, and it's just, as I said earlier, it's nice to have you along for the journey. So thank you very much.
No, listen, it's been a pleasure every step of the way, and we're still going. We're still rolling, buddy.
So a lot left, buddy. Got a lot left in that tank. Let's go. Let's go.
Yeah, let's go. Thanks for your time, bud.
See you in Avalon. Thank you.
See you in Avalon.
Thank you, Al.
For more information about your unique situation, please contact Sika Fletcher or visit us at www.sikafletcher.com. All opinions expressed by the host and guests are their own and are not necessarily those of Sika Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sika Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sika Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others.